So CloudMD was out with their Q2 earnings today. So I'm going to go through those earnings, my updated financials for 2023, and then I decide to start making a bit of projection for the first half of 2024, and then my attempted share purchase. I got some, but not as much as I was hoping to get. So just before I get into CloudMD, I like to keep reminding of everyone of the new terminology. So the new divisions are health and wellness services, and that's becoming almost the whole company now. There's not much left of the health and productivity services. And then they have a few things in discontinued operations. So just recapping those, we've got some new discontinued operations. Benchmark was sold, and they have the cash for that. That helped them be sort of cash in the bank neutral this quarter. But we also just found out that Vision Pros is going to be sold. I didn't understand how this fit in the company, and that makes sense now that they're selling it. It doesn't fit in the company. It was just a big drain. In the Q&A, they talked about how you just need large amounts of capital and scale to deal with the high customer acquisition costs, and they just don't have that scale. So I was very happy to see Vision Pros go. So we have Benchmark sold. They got about $6 million, which again kept their cash the same. We've got Vision Pros. Apparently, they started trying to sell it in Q2, and as of the conference call comments, they haven't reached a sale yet, and they were asked about what they think it might be worth, and they didn't give an answer to that question. I guess they want to, they're in the middle of negotiations, hopefully, with someone, and anyway, they didn't want to answer that, but they did say there was $1.5 million in Q2 revenue for Vision Pros. Now, I had Vision Pros and Benchmark in my Q2 revenue, so when you strip both of those out, it caused my revenue projection to be a bit high. The clinics and pharmacies are long sold, but they're still probably causing some costs, non-current operational costs. So if you look at my previous numbers in the health and productivity services, Vision Pros is now gone. I was estimating 1.5 or 2.1 million, and it was only 1.5 million in revenue, but again, it's in discontinued operations. In terms of the other, I still had Benchmark included in Q2, but it's not in the revenue. And then I dropped their basically health and productivity services revenue to 1.6 in Q3, and it came in as 1.4. So I was slightly high with my estimate for what was left after Benchmark. Nicely, I was low on gross margin, and the sales and marketing and research and development really dropped. These two numbers are much higher. I'm sure the sales and marketing was when you strip out Vision Pros, and so clearly Vision Pros was a huge drag on that line item. Sort of looking at some of the key points of what they put out in some of their press releases and documents in SEDAR today. So the EBITDA loss was 0.7 million, 700,000, better than I was hoping for. And we got some more information on this remote patient monitoring. I'd kind of, read the statement and didn't think it was that big a deal, but it is a huge deal for the company, and they gave some specifics on that. And I just want to highlight, and I'm going to use red in the slides for anything that's going to affect my projections. So they do expect meaningful revenue in Q4. Now I have to guess what meaningful means, but you'll see that showing up in my revenue numbers. So their financial highlights, they have the 23.2 million of revenue. So revenue is up, and we now have 2 quarters in a row. Looks like Q4 of last year was the low point for this company. They have 7% growth, and I'll come back to this because they talk about where growth is going to. So I think it means some pretty significant growth in the second half of the year. Cash balance stayed pretty much the same because cash use sort of balanced the six-ish million that they got from Harris/Constellation Software for the sale of Benchmark. So now the outlook in lots of red, that's going to affect my financial numbers. So the company expects low double-digit revenue growth, okay? But we're only at 7%, so let's say this grows to 12. That's a massive increase. You need, mid to high double digits to pull that up. Now, the details we got on the remote patient monitoring was they're expecting, as they scale it up over a few quarters, that it's going to deliver 3 to 4 million. Now, typically they give a number like this per year, but this is revenue per quarter. So this is, to me, this is massive. So in my numbers, I took a good 3 quarters to scale up to sort of somewhere in the mid-range. I had to make some guesses of about a quarter to a third of the revenue in Q4. I've decided to put none of this revenue into Q3, trying to be conservative and starting with, again, that third to a quarter in Q4, a bit over half in Q1, and then, mid-range of this, all of it in Q2 next year. So it's going to be interesting to see what type of revenue growth, quarterly revenue growth they put in to get this yearly revenue growth to be low double digits. The synergy, so all those discontinued operations will continue to impact cash flows in the second half of 2023. So this company's working on getting to EBITDA positive or adjusted EBITDA positive at the end of this year in Q4, but it's going to take a while for the impacts of all these discontinued operations to get to sort of true cash flow positive. I think 24 will be the year where they really get into, cash flow positive, not adjusted. And then 2025, this company could really start making some decent revenue. It'd be nice to see, 5 or 10% fall to the bottom line in 2025. So again, that's a year and a half away. That's just a thought or a guess. Those numbers, they're not a projection. They're, again, just a thought, a hope. In the conference call, in their documents, they're just very consistent with positive adjusted EBITDA in Q4. And they didn't, when asked, they just sort of stuck to that line. They did give updated sort of past financials just using continued operations. So it's kind of a useful chart. The dip, the low is in Q4 of last year. Some COVID sort of mandates and stuff is likely leading to those dips. So if you I threw those numbers, the current continued operations, so no Vision Pros, no clinics, no benchmark, you strip all that out, and this company looks like their revenue has crazy dropped from, 40 million in Q2 a year ago to 22 now, but it's the sale of all these operations. Their continued operations are not crashing by any means. And I think that's a problem that hopefully the company can overcome with really clean financials, I think, going forward. So everything here is blue, and I use blue to be the released financials. I use yellow or a shade of yellow for my projections. So we did have that much higher gross margin, and then I was, again, a bit off with the sales and marketing and research and development. And, normalized cash flow was a loss of 3 million, cash stayed the same, and a better adjusted EBITDA. And I think they could be pretty close to zero here is my current guess for Q3, and then positive in Q4. And I'd be shocked if this company keeps saying cash flow positive in Q4 and they don't deliver. That would be just jaw-dropping for me. So now we've got some yellow. I started with sort of making some predictions for the rest of the year, updating my previous numbers. Then I decided with this remote patient monitoring to go into 2024. I don't see any point going into the second half of 2024. That's too much of a guess. So in the health and wellness services, they talked about new contract signed in Q2 of 2.3 million. I'm taking that as an annual recurring revenue number. That tends to be what they mean, and whenever they're asked, they top refer to it. So it's not clear, but that's my assumption. So that lets me add about $500,000 to Q3. And then in this, again, remote patient monitoring, I'm not adding revenue in Q3 and then ramping up to 100% of it when we get to Q2 of next year. So that's where my health and wellness services sort of numbers come from. So a full ramp of everything mentioned here. The remote patient monitoring was 3 to 4 million. And that's per quarter. So that's fully here. This is fully ramped in, plus a little growth. For health productivity services, I just have a 2% quarter-over-quarter growth rate. Really just a guess. It might be high, 1.5 might be better. So this 1.5 looks like I'm not changing it, but with rounding to 1 decimal place for presentation's sake, you just don't see the revenue increase. So over, the next 12 months, well over 100 million in revenue, sort of 110-ish. But I think most importantly going forward, it's clean. There's no vision pros, which I found hard to model and didn't seem to be making anything, which was true. Benchmark's gone. It's going to be much easier for me to model and much easier for people to understand, which hopefully leads to more people investing. The margin line is something I updated a bit. I'm hoping I'm low. I was going to go to 40% all the way to their target in Q2. I decided to just leave that at 39. But if they're 38.2, this is the first quarter where we could really see potentially a 40% margin. They talk about that remote patient monitoring being very, low relative cost to the revenue that they get. So it should improve margins. So the gross profit is just purely using revenue, the percent of revenue to get to the gross profit. In terms of predicting the expenses, I'm pretty consistent throughout all the quarters. Sales and marketing had to go down compared to my previous numbers, same as R&D. Again, I equate this to Vision Pros. The acquisition costs, I dropped them off or was tailing them off too quickly, so I had to bring those back up. It's probably at least a good year post the Vision Pros sale, which hasn't happened yet, to see this line sort of head towards zero, maybe longer. So operating gain or loss, and then we have our net loss. Now I've stopped trying to model. I originally we would try to model the difference between these two, and there's just these one-time items that I can't really, sometimes it's a little higher, sometimes a little lower. So I'm just purely pulling down those numbers, and again, it's sort of could go either way. Adjusted EBITDA, and then most EBITDA and adjusted EBITDA, my numbers actually came out to pretty much zero Q3 and 700,000 cash flow positive in Q4, and then kind of growing nicely into next year. And these are starting to become the numbers as they grow. That could make this company exciting, start having, positive earnings per share, see them, maybe in the later half of 2024, 2025, actually generating some significant cash and be able to make small acquisitions with cash. Is probably what I'd like to see. It's probably not going to be a dividend company. I want this to become a growth company, hopefully grow to 20% plus, 40% margin, and 5 or 10% fall to the bottom line, in 2025, and then just can't guess past then. So I was encouraged by the quarter. This was exciting. The revenue, gross margin increase was nice. Still seemed to be well on track for cash flow positive. Cash balance seems to be more than sufficient, and they always say it's sufficient. So they haven't had significant dilution in a long time. The share count is relatively stable. So I did try to pick up a few more shares. I put an order in for 100,000 at 14 cents. I was only able to get 1,000 shares before the bid ask flipped up. So I decided I'd change my bid, and I added half a cent to it. I was able to pick up 63,000 more shares, and then there just was no more to be had at that price, and it sort of kept going up from there, and I wasn't going to change my bid, so I just let the rest not fill. So I ended up with 64,000 shares added. I'm probably about done buying. It's gotten large enough that I don't want this to become too big. I don't want Cloud to be in the top 5 of my portfolio. So that's where I'm at. Relatively happy. I'll probably, as I go through the conference call and the numbers again, make some updates, but I probably won't post anything till I think I might start doing a pre-earnings prediction update before each quarter. It's a nice exercise as an investor to see how well I can model a company and, learn from your mistakes. And when you publish it online, it's out there. It makes you put in more effort to make sure you're reasonably close. So hopefully this video was beneficial to you. Certainly I was open to comments about numbers you think I should update, tweaks to my projections, and your thoughts of where the company will be in the upcoming year.